So the other thing too we need to keep in mind is that the last time we saw the Saturn Uranus, right? We saw the Saturn Uranus alignment is when we saw Lehman begin to collapse, right? The Lehman crisis occurred during the Saturn Uranus alignment. Look where Deutsche Bank is today. It's following the same trajectory. Now, Deutsche Bank is 40 times larger than Lehman, right? So, in fact, one of the statements by the chief financial officer of Lehman 5 days before the Lehman collapse on September 10th, 2008 was, quote, "I think that our capital position at the moment is strong." Boom, right? That happened right here. Boom. The worst is behind us. And then, right, our position is strong. Collapse. So, look, the correlations are clear, right? The correlations are clear, folks. I don't know, how much clearer I can make it because, that statement, let them eat cake, let them eat cake. Look, the monetary and physical stimulus of the past 10 years, all the damage control they have been putting onto the economy to prop it up for political expediency has only served to boost the wealth and income inequality. And it has reduced the opportunity to gain any type of foothold in this new Gilded Age. So really, in terms of offering those, people at the bottom 50% of the stake of this ballooning wealth, the monetary and physical stimulus has failed. No matter what the government does, it's failing to ignite the economy. It's failing to get people to spend. It's failing to build true capital development. And so that's why you have the richest 3 Americans collectively having more wealth than the poorest 160 million Americans. So the bottom line here is that we're seeing more and more stimulus, QE1, QE2, QE3, QE plus, Fed stimulus in March, pandemic stimulus 2, pandemic stimulus 3, all of this, right? The effectiveness of stimulus in generating broad-based opportunity and reducing wealth inequality, right, is collapsing. So financial and social orders begin to crash because of diminishing returns on monetary and fiscal stimulus and increasing sums of yield diminishing results while increasing risk of systemic collapse. So we're moving into that place. Now, if you want to look more specifically in terms of the timing, we just look at the Dow Jones Industrial Average. That started on May 26, 1896 at 10 a.m. We note that chart here. And I just take the SolarArc black box forecast using the Dow Jones Industrial Average. And we could see here the market is actually peaking around this time in late February, early March. And so the level of support. And then it begins to unwind and then collapse as we get closer to 2022. We're seeing this again if you add the transits with the SolarArcs, right? And that it would show more volatility, more day-to-day, seeing the same thing play out here. And the peak's around the same. So we're moving towards the market peak. You look at the S&P 500 index for March 4th, 1957 at 10 a.m. on Wall Street. You see the same thing play out here. It's a little bit earlier. It looks like the S&P peaked earlier in January, and then its support levels begin dropping, but not too far off from what the Dow is showing. And again, right, peak and right. So what we're seeing here is that the everything bubble is beginning to pop. Everything bubble, the everything bubble is beginning to pop this year. And this is not a one-time event. It's not like pops and it's over and we're back to business, right? So the Saturn Uranus indicates that the Fed's moral hazard will create a spectacular crash over the next few months. Now, that next few months, it could be a series of crashes. It doesn't have to be a one and done crash. We have to keep in mind it could be a series of crashes that occur all the way in, and it's going to have profound ramifications on the economy.